A very good evening to everyone. We warmly welcome you all to the fifth session of Target ALL Seminar Series organized by Rotary Club of University of Colombo, Faculty of Management and Finance. Today to conduct the session, we have with us Ms. Anuji Chandrasekhara, a CIMA past finalist and also undergraduates of University of Colombo. So, without a further ado, let me hand over the meeting controls to her. Protractor Anuji, over to you.
Hi, everyone. Hope everyone's doing safe in a pandemic. So first of all, before we start the lesson, I would like to tell you about myself. Like Tarida said, I'm a second year undergraduate of University of Colombo, and I'm a CIMA past finalist. That's all for now. So just to give you an idea, I'm pretty sure national income accounting is a difficult subject, difficult lesson for most of you, because like when I was also doing A-levels, it was quite difficult. So I hope I can clarify your doubts and I will be able to help you out. And I'm guessing in this seminar series today, we have all three people who are doing A-level bachelors of 2021, 2022, and 2023. So I hope you will be able to get something out of this. So without further ado, let's start. And also I would like to say, since we only have 2 hours, but generally this national income accounting lesson takes about, I would say, a month or 2 to cover it. But since it's 2 hours that is available for me to do the seminar for you, I will try my best to finish as much as possible. But just to give you an idea, most of the time I will be covering output approach and income approach. My main target is to finish output approach. If time permits, I will definitely look into the income approach as well. Okay, so let's start. Okay, so national income accounting. Please, if there are any questions, please drop me a text, drop me a message to the chat box. And yes, that's it. Okay, so national income accounting. So now you all know in the syllabus, we have microeconomic topics as well as macroeconomic topics. So microeconomics, we talk about household level, individual level, while macro, we talk about large, as in economy as a whole, macro level. Macro is large, okay? Basically, just to give you a simple idea. So national income accounting, in national income accounting, we try to calculate what is national income accounting if I ask you the question. We try to estimate the value of the main economic variables in order to analyze the structure, performance, and behavior of the economy as a whole. Now, you might have heard GDP of Sri Lanka is this much. GDP of USA is assuming like just a random number, 10 times greater than Sri Lanka. What do you mean by this? Believe it or not, the GDP in Sri Lanka is actually quite better than some countries in South Asia. Like for an example, compared to even really good countries like Nepal, Sri Lanka might be better off. Okay, what determines this GDP? What is this GDP? So to talk about this, I will be covering this topic today. So what do you mean by GDP? What do you mean by GDP? So GDP is generally, we calculate what is the output of an economy. So what is the total number of goods and services that are produced in Sri Lanka? So basically you can say it is the worth of Sri Lanka as well. That is, now if a company wants to buy another company, we check, okay, how well are they performing? Is the company really good? Are they performing in terms of sales, profits, everything, right? Similarly, country's worth is measured by many factors. One of them is GDP. One main contributing factor is GDP. GDP will show you our country is producing this many goods within a year and this many income. So one person can earn this much. So all this is based on the information that we get by calculating GDP and similar data. Okay. So I would like to start by explaining you the circular flow of income. I'm quite sure you're familiar with this because we have been doing this model from, I think, lesson number 1. So basically what happens is, there are four main agents in the economy. That is a household, and we have the firms, that is the business sector, the government, and the foreign sector. So the main two in a simple economy is, households and business sector. So we know households will sell goods and services. We all know that. Households will own resources. We all know that. Household is you and I. For an example, now if you take me, I don't have a business yet. So what I do is I provide my labor. I have labor. Your parents have labor, right? Your parents have money. Your parents have land. Also, this entrepreneurship comes here. I'm really sorry for not including it. But you have land, labor, capital, entrepreneurship. All these factors are with us, right? Whenever we want to work or we want to start a business, we are the ones who carry these to the firm, right? A firm can't function without resources, and these resources are provided by us to these firms, okay? So like I said, now for an example, let's take your parents. Just to be more clear, be more specific, let's take your fathers. Now your father at home, he might be a businessman, he might be working for another company, or he might be having his own company. Irrelevant. He will have labor, he will have capital, he will have entrepreneurship. Entrepreneurship is the knowledge to start a new business and the skills to start a new business, basically the ability to utilize all these other three factors for production. Okay, so these households will have the resources. Household will then provide these resources to these firms. So now, for an example, like I said, your father might be working for another company. He uses his labor and he works for the company, for the firm. So he will put these inputs for the firm. For the firm, this labor you provide, the capital you provide, the entrepreneurship you provide, all these are inputs. They will use these inputs to provide output. What do you mean by output? At the end, they will use your labor and everything, and they will produce an output. Output may be a good or even a service, right? So households will provide inputs to the firms, and firms will sell the output. By using these inputs, they will produce output, and this output will be sold back to the household, right? For an example, your father uses his labor, gives his labor to the firm. Using your father's labor, they will produce a good or a service, and then they will supply this service back to you or basically your cousins, your friends, anyone you know, household, right? So these are the goods. This is how the goods are being moved. Then for this output that for this input you give, your father provides to the firm will provide money, will pay a wage for them, right? Similarly, now households will provide inputs, firms will provide a wage for these inputs. Then what do these firms do? Firms will produce goods and services and will sell to the households. Households will then pay for these goods and services. Then it comes back to the firms. That is, household will pay for these goods and services. They will pay to the firms for these goods and services. Now if you just listen to what I said, it is quite clear that now, it is quite clear that there is an interrelationship between households and firms, right? So, yes, I will explain that in the next slide. Yes. So economic agents who contribute to this GDP, like I said, now households you have, business sectors you have. So you categorize these economic agents into many, many types. So businesses, we categorize it further so that it's easier for us, okay? So we have households, like I said, you and I are households. Business sectors, we categorize it into many firms. One of them is financial firms. You have the financial companies such as banks. Then you have the non-financial firms such as these factories. Then you have not-for-profit organizations such as Bill and Melinda Gates Foundation. I think you've heard of it, who are working towards providing education and providing equality, supporting equality. Then you also have foreign sector, who will export and import, definitely their exports and imports will add value to the economy. Because now let's say your phone, okay, or the laptop that you're using right now to listen to this seminar, all these inputs, like this laptop, for an example, the laptop or the phone that you're using right now, I'm pretty sure it is imported from another country. Okay, it is very rare that you will find a laptop that is made in Sri Lanka. Other than that, you probably have imported it. So definitely this laptop, we bought it from a foreign company. We imported it, right? So it will definitely contribute to the GDP. Whatever we are using here will also contribute to whatever it is made in the country GDP or GNP. I'll explain what's the difference in a while. Okay. So like I just said, now when we talk about the circular flow of income, yeah. So when we talk about circular flow of income, I'm sorry to show you cake at this time. All of you must be hungry. Really sorry about that. So anyways, so you will use inputs to make cake, right? To make a cake, you will use inputs such as flour, sugar, butter, cocoa, whatever it is. Then you will make the cake, you will frost it, you will mix it, you will bake it, everything. Then you get the final output, right? Now say I go to a shop and I'm going to buy a cake, okay? So when I'm buying the cake, whatever price they're selling at, let's say the cake is 3,000 rupees. So I'm paying this 3,000 to get the cake. So you know, value of the output is 3,000. Obviously, whatever the place, let's say it's Hilton. I got the cake from Hilton. Hilton sold me the cake for 3,000. So the output of Hilton was 3,000, right? Also, to obtain this cake, to purchase this cake, I had to spend 3,000. So the customer had to spend 3,000 to buy this cake. So expenditure is also 3,000. You can say output from one company. Output of Hilton is equal to the expenditure of me. I had to pay 3,000 to get this cake. Then if you take Hilton or whatever, like a small bakery, let's take Sensal, or even a very small bakery, like you get the Sumanadisi and different bakeries, right? So whatever you pay for, this bakery will get my 3,000, right? Inside this 3,000 that I'm paying to the bakery, there is obviously the cost of the inputs, obviously, because the baker had to purchase these inputs. So that is included, and also profits. Profit is included in income because we are paying the profit, right? So definitely output value is also equal to the expenditure that I incur to purchase this. Now I get Hilton's cake. I spend 3,000 to get this cake to Hilton, and Hilton will get this 3,000 from me. So Hilton's income is 3,000. So I'm pretty sure it's clear that output is also equal to the expenditure, which is also equal to the income. So you can say simply output, income, and expenditure, all these three are the same because it calculates the same thing. Like whatever it is, output of the economy is also equal to the expenditure, which is also equal to the income. Okay, it's not difficult. Yes. So, to calculate this GDP, that is, like I said, how much of goods and services that is produced inside the country, you can use output approach, which gives you the output of the country, which is the same as the expenditure approach. Expenditure approach, the only difference is instead of talking about the output, we consider what do people pay to obtain this output, and the income approach, which means when we spend, when we produce and when we sell, what is the income we get. So GDP can be calculated in all three ways, and all three gives the same answer. Okay, these are just three methods of looking at it or calculating it. Very simple. Okay. Okay, so hence we can say output is equal to the income, which is equal to the expenditure. So there are three methods to calculate the aggregate output, or you can say GDP, GNP. to calculate this output. What is the total output? What is the total goods and services that is produced in Sri Lanka in 2020? You can calculate it by adding all the output that is produced by each firm, or what is the income that is received by each firm, or what is the expenditure that had to be incurred by every single citizen. You can take. Okay. So now there are two main concepts that we, there are more concepts, but I would say main two concepts called GDP and GNP. So first, let's look at GDP. GDP stands for gross domestic product. It's quite clear, right? When you say gross domestic is domestic. The word domestic means you say domestic appliances, whatever it is. Domestic is inside. You say inside my home is domestic, or you can say gross domestic product is inside Sri Lanka. How many goods and services, the value of the goods and services that is produced inside Sri Lanka. Okay, this is not outside Sri Lanka. This is not by the Sri Lankans. Any good that is produced inside Sri Lanka. So it can be Sri Lankans, foreigners, anyone who's producing inside Sri Lanka. Okay, so these foreign companies, for an example, you might have heard Nike has this, Nike produces their clothes in Sri Lanka. Like not only Nike, you have many brands like Nike, even Jack Wheels, then you have Victoria's Secrets. Most of these products like Marks and Spencer, they make a lot of products. Like similar products are made in Sri Lanka. So these are made in Sri Lanka by foreign companies. Doesn't matter. For GDP, we calculate all the goods and services that are produced inside the geographical boundaries. That is inside our little country, all the goods that are produced. Okay, so we calculate it as monetary value of all final goods and services produced within the geographical boundaries of a country within a specific period of time. Okay, so GDP, you don't say GDP for 8 years. You just calculate GDP for 2020, GDP for 2021, GDP for 2019. So obviously, I'm pretty sure it's a fact. Compared to 2019, GDP of Sri Lanka dropped. Now you know what you like when you hear news, when they say GDP of Sri Lanka or Daladeshi Nishpadane, when they say those words, when they use these big words, you know, okay, they're talking about this. They're talking about what are the amount, the value of these goods and services that were produced in Sri Lanka during this year. Right. So now I told you to calculate GDP, there are three main methods. That is the output approach, income approach, and expenditure approach. If there are any questions, just drop me a text, drop me in the chat box. I'll just read. Are the imports included in GDP only the goods produced inside the country included? Yes, correct. Inside the country, we consider it. In GDP, we take all the goods that are produced inside the country. Like I said, doesn't matter if it's Sri Lankans or not, residents or not, anything that is produced inside the country is considered in GDP. I took this example before. I said whatever you use, the laptops that you use, that is not for GDP, but we use it to calculate what is the value addition to the economy and what are the total value of the goods and services. Doesn't the income of such multinationals go to the mother country? Yes, it does. It depends on what we are calculating. If it is GDP, it doesn't matter. If it is GDP, doesn't matter where you're doesn't matter what the country of origin is, as long as it is produced inside the country, you take it. Okay. Where to get this PDF? I sent it to Tharindu. I think he sent it to your groups. Let me know if he hasn't shared it among y'all. I'll ask him to share it ASAP. Okay. I think those are the questions for now. Yeah. So when we're talking about the output approach, now, like I said, to calculate the total value of the goods and services that is produced inside the country, that is, if you're calculating GDP, that is, okay. Now, again, I'm telling you, It may be GDP, it may be GNP, it may be NNI, it may be like anything you might have heard, right? Like GDP, gross national product, gross domestic product, gross national income, gross domestic expenditure. You might have heard these fancy words. Do not worry, all of it, to calculate any of them, you need these three approaches, okay? Whatever it is, what are the like, basically to calculate any of them, we need to know how many goods are produced inside the country, right? So for that only, we use these three approaches: output, income, and expenditure approach. All these three approaches will give you what is the value of the country. After that, you can make adjustments, and you can make small adjustments and make GDP into GNP, or GDP into GNP into NNI. Like that, you can convert it into anything. Basically, first we need to know what are the goods that are produced inside the country, right? That is what we are doing right now. So, like I said, output approach. I said output, income, and expenditure approach are the same. Output approach is the longest, but usually output approach is the longest. But in the paper, most of the time they test income approach and the expenditure approach. But it is vital for you to understand the output approach for you to answer those two. So I will be explaining output approach now. So if I have time, I will definitely look into those two as well. Okay, so output approach. Output approach, we estimate the total value of the goods and services that are produced during a period of time. Yeah, within a period of time. So what are the total value of the goods and services? That is the total value of the final goods. Now remember here, there is a word called final. What do you mean by final? You might have a question. Let's hold on to that thought. Let's look at that a bit later. Just remember that there is something called the final goods. I will be looking into this in detail as we move on. Okay. So in the output approach, we take the total value of the final goods and services produced within a period of time. Like I said, in 2020, how many goods were produced inside Sri Lanka? Okay. Now, when we talk about this economic activity, that is, the process of production is the economic activity. Like, let's say you produce let's say a water glass, or a water bottle. So that is an economic activity. So whatever you do, most of these activities are economic activities. Now, economic activities, we categorize it into two, called productive economic activities and unproductive economic activities. What is meant by this productive economic activities? Productive, obviously productive means, now you say my day was productive, right? That means you feel satisfied. Okay, I have done a lot. I have utilized my time. I'm proud of myself. I was productive today. I did a lot of work. I was able to do a lot of work. So productive means you have an idea, it's something good. Let's look into it in detail. But like unproductive is, it's not useful. Like if it's not useful, will you consider it in GDP? No. If it's unproductive, we won't consider it. It doesn't matter to us, right? Now, yeah, so productive activities, remember, not all productive activities are included. So anyways, unproductive activities are not included because there is no point. It is not producing any good to the economy. While productive activities, we consider it into two, we categorize it into two, called those who are included in GDP and those who are not included. Now you must be wondering, if it's productive, I said it's good to the economy. Like it's good to the country, like you're utilizing these resources. If you're utilizing these resources, shouldn't you include everything? Let's look at that. Why do we exclude some? Okay, so productive economic activities are any activity that contributes for the production of goods and services in the economy. So if you produce any good or a service to the economy, you consider it as a productive economic activity. Now, you might be wondering, what are these non-economic activities? I'll tell you one example. Now, let's say sunrise, or even rainwater, collecting rainwater. Is it productive? Do we produce a good or a service? Not collecting rainwater, just rainwater. Do we produce something out of it? No, right? So natural phenomena, we do not produce any good or a service from it. There is no creation of value. Okay, so those activities are anyways excluded. Now, again, I'm talking about this productive economic activity. So how do you know which activities should be included and which activities should be excluded? For that, we use this production boundary. You might have heard this production boundary. Some of you might get worried. Okay, what is this production boundary? Now, production boundary is actually, it's a big thing. It's like you have a lot of things which are included and which are excluded. So I have included some of it, which I included, which you will need for your exams. So productive activities which are included, like I said, now, like I can't just look at an activity and say, okay, this is productive, I should include this. This is not productive, I shouldn't include this. I can't decide that. Government has provided a guideline saying production boundary for us to like make use of when deciding what are to be included and what is not to be included. Okay, so now for an example, now let's talk about examples of some activities which are included in the JDP. So these activities that are included in JDP are products offered with the intention of making a profit. Obviously, if you want to sell, if you want to make a profit, you will sell this product, right? Let me check. You didn't get the PDF. Give me a second. I'll get the PDF right now. Oh, wait, I'll share it to the chat box. It's not a PDF, it's a PowerPoint. Yeah, let me know if you received it. I think it's too long. Hold on. Really sorry for the interruption, guys. Yes, sorry about that, guys. They will send it to your groups right now. Yes, I will send, one of my friends will send the PDF to the group. Okay, not to worry about it. Okay, so till that is sent, I will start. I will continue. I mean, yeah, hold on. Yes. So what are these activities that are included in the JDP and what are the activities which are not included in JDP? So like I said, products which are offered with the intention of making profits. If you want, like obviously, now let's say that this is general knowledge. Now I would say if I'm starting my own company, I will not make the company just to produce goods for myself. No, I will definitely sell it out to the public, right? So if I'm selling it out, if I have the intention of selling and making a profit, it's definitely included. For an example, any company you can take, Nike, Adidas, even John Keel's Holdings, anything you can take, they will produce with an intention of making a JDP. Then it's definitely included in JDP. Then products that are produced without a motive of selling to the market. Now, sometimes you might not have the motive of selling to the market. I don't want to sell it to the market. Okay. Example, not-for-profit organizations selling for free. You might have seen these companies were selling for a very low price. You, like, for an example, Hillabojun, you might have heard. When you go to, I'm pretty sure most of you are from Colombo. When you go to other areas like Kandy, any area basically, you find, I'm pretty sure you might have passed at least one Hillabojun. Okay. But we tend to go to this Hillabojun because one thing is it's really good. The food is really good. Yeah, they sell, most of the time they sell these most of the time they sell these, most of the time they sell something like cookies, kaum. Then you have what this tani walulu. Yeah, so you get something like that, right? So there are many things that are sold in those stores. And another thing that attracts most of these people to these stores is the price. It is so affordable. Okay. Compared to a big place, it is very affordable. So these activities are included in GDP because they have the motive of selling. They don't intend to keep this among themselves, but they do intend to sell it out, right? So, these are without the motive of selling. Now, not-for-profit organizations, they produce this, but the excess they sell it. They sell it not for a very high price, but for a very low price, or even sometimes free of charge. The main objective is not to sell, but to another objective, such as providing charity, providing satisfaction to people, like that. For an example, this seminar, okay, it is productive, right? It is definitely productive. You are learning something out of it. And I'm providing a service, but are you all paying something for it? No, this is given for your awareness. We are giving a help, like we are doing all a service, and we are not-for-profit organizations, that is Rotary Club of University of Colombo, Faculty of Management and Finance. Okay, so these are also included in GDP. Next one, production for self-consumption. Now this you need to pay close attention to. If you are producing for your consumption, you include it. For an example, now my mother started growing carrots in our home. Now she started growing these carrots, and like, it saved us actually some amount of money, because if she didn't grow this, she will probably have to buy these carrots from a supermarket, which costs, right? So if I'm producing for my consumption, for my home, it saves me from consuming. It is productive. I'm producing a good or a service, right? Then it is included in GDP. That it's simple. Next one, productive activities that are not included in GDP. Now, you might get a bit confused with this last point and this. So this talks about the goods that are produced, okay? Goods that are produced for self-consumption generally. Clothes, farming, like these clothes and the veggies you get from your home garden. And let's say you grow chickens and you kill them and you eat, example. So next one. So when you the next one is, these activities are too productive, but it is not included in GDP. What are these activities? Now, services in household, it is definitely productive, right? I mean, some of you might be having maids, right? Instead of your mother or father or sisters cleaning your home, you get a servant, right? Or a maid, you can call them. They clean your house. So it is productive because you could have paid someone else to do this service for you, okay? Or gardening, you might have paid someone else to do this landscaping for you. Cooking, similarly. These services is definitely productive, but we do not include in it. Why don't we include in it? Because it's extremely difficult to value these ones. It's very difficult for you to value. You can't say, okay, for cleaning my place, I should get paid this much. For gardening, I should get paid this much. Yes, there are people who will quantify it, who will say, okay, this is the amount you should pay, but it is generally very difficult. Okay. So because of this, we exclude it. Okay. So remember, goods that are produced in household for consumption is included, but services are not included. Next one are the natural activities that are occurred without the intervention of people. Now, if you take increase in fish in a tank, it is productive, right? Obviously, it will increase the amounts of fishes, right? So increase in fish will provide us food or even create to the biodiversity. So it is productive, okay? It will provide a good, or like you can say it is very productive because it will help us in many things. But we do not include it because we are not utilizing our resources to produce it. It is happening naturally. So we do not include these ones. If we are not doing it by not like utilizing everything, can you tell me, if I ask you what is the value for the increase in water levels of a river, although it is very productive and it is very good for us, if I ask you how to can you tell me the value that we can get out of this? You can say it in words, but like, I mean, you can explain it, but you can't tell me the number, right? So you can't calculate the GDP, you can't calculate GNP from this. So we exclude it. Okay. So another activity that is excluded is known as this hidden economy. Now you might have heard this. I'm pretty sure some of you might even be confused of this because I was confused when I did my A-levels. So I'm pretty sure some of you might be confused even. So hidden economy. Hidden economy, it is very important to note, remember that hidden economy is productive, okay? It is productive. You produce a good or a service. And you also call this hidden economy as unobserved economy or unrecorded economy. What do you mean by unobserved? You can't see it. Sometimes hidden can be underground activities, or it is unrecorded. Unrecorded as in you don't keep records of this. What are these? I'm pretty sure the first thing that came to your mind is drugs, but it's not only drugs. Remember that. Yeah. So there's unobserved economy. You can classify it into two, called the gray economy and the illegal economic activities. Now, gray economy is, I'll explain it in detail in the next slide. First, I'll look into this illegal economic. Now, I'm pretty sure illegal, yes, first thing that comes to your mind, drugs. Drugs are the illegal activities. No, drugs is only one of these activities which are illegal, okay? Illegal doesn't mean that it's always good. The good or a service is illegal, okay? That's only one type of illegal economic activity. So I would say this illegal economic activity, we can further classify it into two categories. Called, the first one is producing goods and services which are illegal, right? Producing goods and services which are illegal. Yes, you're right. We are talking about drugs, okay? Or else you can say illegal activities such as you're producing counterfeit goods, you're producing fake products. It's not legal. Producing fake ones are not legal, you can say. So the next one, I said the first one is producing goods that are anyways, you're producing something illegal. Or you produce. Or these goods that are legal. The good itself is legal, but it is provided by unqualified people, okay? Now you might have heard these doctors. Now I know several doctors who have obtained their degree or whatever you call this. They obtain it from a foreign university, and I think they have to practice. They have to do an exam in Sri Lanka. For you to practice in Sri Lanka, they have to do an exam. But that exam is difficult. So what they do is most of these students who go abroad to like do medicine, what they do is they come to Sri Lanka, they don't do this exam or they fail this exam. Then what they do, they shape, okay, what they do is they will practice, they will give medicine to you, but they are not legally recognized. Now, providing medicine is legal, it's completely legal, but it is provided by the services done by an unauthorized person or an unqualified person, okay? Another example, so you might have heard these bars, right? The bar we go to drink, okay? So when we talk about these bars, so bars are not illegal in Sri Lanka, it's completely legal. But the issue is, if you run a bar without a bar license, you are doing an illegal activity. Okay, for you to run a bar, you need to have a bar license. So remember that, guys. Illegal economic activity is not always illegal products. There are legal products which are done in an illegal manner as well. These ones also we call these as illegal activities, not illegal products, but illegal activities. Okay. Okay. So the next thing is whether it is legal or illegal, just remember, doesn't matter if the product is legal or illegal, we should include this, like it is productive, right? We should include this in GDP. But people don't, like, obviously, if I'm running an illegal business, I would not tell the government, okay, I'm doing an illegal business, here, I'm earning this much, I'm doing illegal. You will never say that, right? And even these doctors, like I told you, they're providing a legal service, but do they say, okay, I have a fake license, I'm practicing medicine here? No one would do that. So if it is the case, like these people who do illegal stuff, they do not report, they do not go and record. Okay, so because of that, it's very difficult for you to measure. You can't say, okay, this many people did this. It's very difficult to measure it, although it is productive. So we do not include this one. So a common question that has been always tested in A-levels is, why is GDP understated? GDP is understated because there are productive activities which are not included. Why do you not include these ones? Because it's very difficult to measure these activities. So remember that, remember this question, guys, remember this point. It is frequently being tested in the exam. Why is it not included? Why? You know why now? Because it is difficult to value these goods. Okay. Now, okay. So these gray activities. Now I said illegal you have in one arm, and the next one is gray economic activity, gray economy. Now, if I ask you the question, what is this gray economy? If I ask you the question, what is this gray economy? These are the activities that are purposely not disclosed to these officials with the view of preventing from paying taxes and complying with regulations. Now, you don't include it, you don't disclose this purposely. I don't want to disclose this. Why? Because you want to prevent from paying taxes and complying with regulations. I'm pretty sure, although this is not a good thing, I'm pretty sure some of your parents might be buying, like this is for just for an example, guys. It's not good to do this. I'm just saying, it is commonly believed, even in Sri Lanka, we say, okay, if you evade taxes, oh my God, you're a cool guy. Okay. Sometimes your parents might be buying these vehicles, houses for other people's name. That is, people who are working in private firms because for tax evasion purposes. Now, they come under gray economic activity. Remember, some of your cars should be, like if you take properly, it should be included, but we do not include because you do not, like these taxes, we do not include these activities. We started a business, I bought this car, you do not include this just because you want to prevent from paying taxes and complying with the regulations. Now, paying taxes, I explained. What is complying with regulations? Example, you might have seen, like I'm pretty sure you all watch movies as teenagers. So you might have heard, you might have seen in movies where they, where ICE, you might have heard ICE, immigrations and customs, immigrations and customs enforcement or whatever. I'm not sure about the last letter. Anyways, so what they do is, they will, like, you might have seen them coming and dragging the people out. No, you can't work here, you're an illegal immigrant. You might have seen this. This is very common in movies especially. So these activities comes under gray economy. Why do they come under gray economy? Because they're earning income in a country without a visa. If you do not have visa, guys, you can't work in a company. You can work in a small company, your friends, but a proper place, you can't work legally. These are gray economic activities. So just to, like, I'm pretty sure y'all have been listening to me for some time. So just to change of pace, I will show you this video now. Just a small part.
So there's an easy way to get a band 7 on the IELTS exam. And as a former IELTS examiner, I'm going to tell you how to do it.
Sorry about that.
Cloud 9 employees, were you born in a foreign country? Have you overstayed a visa, or did you cross the border illegally? Well, today is not your lucky day, because ICE is here. So stay tuned, because you can't leave. I like to add a little color to the announcements.
Mateo, you're an American citizen, right? I have plenty of documents. I went to the green card store personally with my grandmother.
The green card store?
They sell green cards and knockoff handbags and bootleg Spider-Man DVDs.
Okay, so just to get an idea, small video, just to like take off your mind and like start fresh. So yes, now you saw in the video I just showed you. You can see that guys run, right? That guy runs when they see, okay, like ICE is coming, then he runs, because definitely if he gets caught, he will go to prison. Okay, he will go to prison and he can't work, and like there are many issues. Sometimes he might be deported to his country of origin also. So there can be many issues. So that is, those activities comes under gray economic activities. Okay. These illegal economic activities, like I said, legal activities, which are illegal activities, we categorize into two, called producing goods which are legally prohibited, and goods are legal but produced by unqualified people. So whether it's illegal or not, these activities should be included in GDP, but due to non-filing of these illegal activities, it's difficult to measure. Hence, GDP is understated. Can someone tell me if the video, if the presentation is uploaded now for y'all? Okay, good. Now let's look at some questions. Sorry guys, I might have missed it. But in the sale of second-hand products, the seller will also have a profit. But is it not included in GDP? Yes, it is not included in GDP, guys, because there is no value addition to the economy. Always, for it to be included, there should be value addition. There should be a value addition. Okay. SNA. Can someone explain me what SNA is? Can you explain SNA? I don't know what SNA is. Can someone explain the words for me? Point one again. I'm sorry, guys. I can't check each question as I'm moving. Like, if you all have any questions now, send it. Guys, am I clear? I hope I'm clear. If we keep a servant for cleaning purposes, is it included in GDP? Yes, definitely, because you can value it. But sometimes, guys, now these maids, the issue is like these maids who are working at home, if it's from a professional service who are providing this service, yes, it's definitely included. But guys, most of the time, these maids who are working in our homes, like they don't go and file, okay, I'm earning this much, I'm paying this much. No, like they don't do that. They don't file their taxes. They don't file their income. So in those cases, we, like most of the situations in Sri Lanka, if we're talking about in a Sri Lankan context, we don't include it because they don't file it. It's gray. But it is like if it's done by a professional service, it is included for sure. Are hidden activities productive? Yes, it is definitely productive. You are producing a good or a service. You're producing a value addition to the economy. I think someone has asked, what is gray economy? I think you're clear now. If it's not, just send me a text again. Is it included in income approach? What is included? Guys, please drop the message again. I'm really sorry to make you repeat. So the production of alcohol with license is included. Yes, it is included. If it is production of alcohol, yes. If it is legal, it is included. The non-observed economic activity included in GDP or not? No, it is not included because you can't calculate it. If you can calculate it, you include it. Is gray economy also known as hidden economy? Yes, correct. Unobserved economy, unobserved economy or hidden economy is the large term. Under that, we have gray. Yes, most of y'all are saying it's uploaded, so I'm guessing it's uploaded. System of national accounts. Yes, so national accounts is this basically. We are calculating what is the value, like further on as you go down the line, you might be able to understand it. A little more about gray economy, I'll explain that. Production of alcohol, I answered that. Yes, thank you, Himesh. Okay, so next one, as I was explaining. So when we talk about the gray economy, so gray economy, someone has requested to explain it again. I'll quickly do it because we don't have time. Okay, so gray economy is, I think after the video, it's a bit more clear. So gray economy is not, guys, we are purposely not disclosing it. Like I said, now for tax evasion purposes, I'm not including it because I know if I include this, I will have to pay taxes. So I don't want to do that. So because of that, we don't include these activities. Like I'm buying a car, but I don't want to include it like that. Or else people who are earning income in a country without visa, like you might have heard, like I think like there might be some person or in your bloodline or someone who might have flight to a country to as an illegal immigrant and who are earning without a visa. Okay, so they are hiding themselves because if they fly to this country without a visa, they will have to hide, because if they get caught to ICE and those, like there are different infos, like there are different authorities in different countries, they will drag them out of the country and they will say, okay, you're deported or you're imprisoned. Anything, it can happen. Okay, so for like gray economic activities are those. They are productive. They are producing something. Like in the example I showed, this guy is working in a company. He is working in a superstore. But when now he's earning income, he's doing something productive. But he's not disclosing that he's working in this company for tax evasion purpose. No, sorry, for because he doesn't have a visa. He's not complying with regulations. Pretty sure. Okay, if it's an issue, just drop a message again. I will personally send it. I'll send you my number also, guys, at the end. So non-productive economic activities. Now, non-productive economic activities are the economic activities which are not contributing for the production of goods and services. Like I said, productive is contributing for the production of goods and services. Non-productive is it's not contributing for the production and goods and services. So these activities, guys, obviously, it does not create a new income. So it will actually, instead of creating something new, it will redistribute the income. Okay, for an example, purely financial transactions. Guys, I think I made a small confusion at the top, at the beginning, where I said natural causes comes under non-productive. No, natural comes under productive. I think I clarified it later on. But yes, non-productive is you're not creating anything new to the economy. Okay, nothing new, no new good or service. So these are purely example is purely financial transactions. So you have stock purchases, purely financial. You're not producing a good or a service. Then interest payments, you're not producing in a good or a service. Interest is not a service, right? Then reselling assets. So second-hand ones, you're selling the same car. There is no new addition to the economy. Transfer payments like samurdhi and pensions, one-sided payments. Like you might have heard these samurdhi and pensions now, like your grandmothers or your grandparents or your parents, some of your parents might be getting this pension. Now, they are not working. They are not contributing to the production of goods and services because they have done it before. Now they are not, right? Now they have retired. But what do? They get a pension from the company or from the government, right? They get a pension. So it's a one-sided payment. It is not productive. You're not creating a good or a service from this. I hope I'm clear. So now, a deep breath, the next topic. So problems in calculating the final output. Now, like I said, final output, if you take, it is like I said, now, if you look around in your, like wherever you are, if you just look around, you can see, okay, there are chairs, there are tables, there are water bottles, cups, mugs, pens, pencils. all of these are final output, guys. So when we talk about these goods, we can categorize these goods into two types called final and intermediary. So guys, it is very important for you to remember that what decides if this is a final good or an intermediary good. Now, when I look at this sanitizer bottle, I can't say, okay, this is an intermediary good. I can't say that. Okay, this is a final good. I can't say that. This is based on who purchased it. Okay. Now, for me, this is a final good because I'm using it for my use, for my consumption, for my purpose, right? But if you take the place I bought it from, such as let's assume I bought it from Kiehl's. So if I bought it from Kiehl's, for Kiehl's, it is not a final good. It is an intermediary. They purchased this good and now they are selling it to us. So they are this is an intermediary good for them. Okay. Another example. Guys, please don't draw in the screen. Okay. So when we talk about the, I'm not sure if I can remember, I can erase this, guys. I'm pretty sure. Afrat, can you please try to erase this? Oh, no, I can erase it. Great. Okay. So when we talk about these final output, when calculating the final output, now guys, final output for one person might be an intermediary good for another person, like I just said. Example, now I'm buying an ice cream. Now, when I'm like, let's say I'm making like, I'm buying an ice cream. So I'm buying this ice cream from Rio. Pretty sure you all have tried, if you all are Sri Lankans, definitely you have tried Rio ice cream. So now Rio, the shop or the shop, yeah. So Rio, to produce this ice cream, they had to buy milk, right? They are not going to they're not getting the milk by themselves from the cow. So obviously they are buying this milk from someone else. Okay, let's assume, okay, even if they're like, if like most probably they will buy these milk cartons from another company or another shop, right? So now for Rio, this milk is an intermediary good because they're using this milk to produce ice cream. So it is an intermediary good for them. But guys, if we talk about now for Rio, intermediary good is milk. But if you talk about who sold this milk to Rio, example, let's say Rio buys this milk from Ambevela. Now for Ambevela, milk is not an intermediary, it is a final good because they sold this good and done, their relationship is over. But for Rio, they use this milk as an intermediary for the production of ice cream, right? So like I said, you can classify these goods as intermediary or final based on who uses it and for what purpose you use it for. Okay. So these final goods, guys, again, we can classify it further into two called consumer goods and investment goods. So consumer goods are the goods that you purchase for your consumption. Investment goods are the goods that you produce, that you use for the production of another good. Okay. Example. Now, like I said, final good. Now, investment goods are like these machinery. I'm pretty sure you know this stuff, machinery and those things you use to production of another good. It is like you purchase this final good for investment purposes, or a vehicle or a building, anything. So now guys, because of this, okay, like I said, now for Rio, this milk was an intermediate goods. But guys, for now, when we calculate, when I ask you the price of an ice cream, you will definitely, in this ice cream, you have added a price for the milk you bought from Ambevela, right? Rio bought from Ambevela. Rio will have the price of milk included in the price of this ice cream, right? So, but this same milk that Rio used for the production of ice cream was the final output of Ambevela. So when the government calculates, okay, what is your output? What is your output? Now there is an issue because this milk is being counted many times because Ambevela also included this milk while Rio is also including the same milk. So there is an issue here. So when there is a practical issue when calculating this output. This is what we call as the multiple counting error or the double counting error. This means certain activities, if we use both intermediate goods and final goods, if both of these goods are counted, because we can't distinguish these ones, right? Can we go and ask you, okay, where did you buy this milk? If so, we will have to ask all these shops, okay, where did you buy? And we will have to deduct all these ones, which is not practical. So because of that, because of this, there is an issue, okay? That is a double counting error. This same value, price of milk was calculated in many places. So final goods of one may be the intermediate of another. So there is a double counting error, okay? Now, so to overcome this double counting error, guys, now, if there's a problem, we should find a solution, right? So government has done the same. They have found a solution, okay? Now, not the government, like worldwide, they have come up with a solution for this. So to avoid this problem, to overcome this problem of double counting error, they have used two main approaches, two main methods called the final output method and the value added method. What is meant by this final output method? Final output method is, guys, what is the value of the final output? You take, okay, of each company, what is the final value? Or you can take the value addition. Value addition, I'll explain in detail further on, but you take, okay, now Rio, how much of value have you added? Now Ambevela has added the value of the milk to the society. Rio, you can't take Ambevela's value. How much will you add? That is a value added method, okay? Final output method, if you take, guys, we take the value of all the final goods and services, okay? Now, when we talk about these final goods and services, we can classify it, I told you, into mainly two types. Yes. So I told you here, intermediary goods, final goods are classified into two. So 1, 2, 3 categories are there. So we take consumer goods, 1, capital goods, 2, and the intermediary goods, guys, we take the change. We don't take the final, value. These are intermediate goods. That means like, who are like, these are the products which are in the process of making. These are not final goods. These are yet to be finalized. So these goods, it is important to pay attention to this. Here, we take plus closing stock minus opening stock. Why do you add this closing stock? You might ask. Closing stock. Now, guys, you know accounts. I'm pretty sure everyone here. No, some people are doing this arts as well. That's fine. So, guys, closing stock. Closing stock is at the end of the year. How much of goods are yet to be completed? These goods we have made this year. These are yet to be completed. So, guys, this year yet to be completed. Next year, we take this as opening stock. We take the incompleted products next year, and we convert these incomplete products into complete products. So that's what you call as closing stock. This year, end of this year, what is the stock? That is the closing stock, incomplete products. Next year, what is this year's incomplete stock? That is the closing stock, is next year's opening stock. Okay, so pretty sure the accounting students know this more than me. Like I'm pretty sure y'all are experts in this. So, guys, closing stock is added to this. Why do you add this closing stock? You add this closing stock because closing stock is included. It is produced this year, guys. Closing stock is produced this year. While opening stock is, guys, I told you before, this is the incomplete products of last year, closing stock of the previous year. So we take closing stock minus opening stock. We add the closing stock because it was produced this year. We deduct the opening stock because it was produced previous year. That's right. That's it for that. So next one. So the practical failure of this final product method. Now, final product method is good if you can calculate, okay, this is the final good, this is the final investment good, consumer goods in the intermediate, like the stock that is in production yet to be produced. If you can calculate that, that's very easy, right? But guys, it is not possible. It is not practical for you to calculate this final product. Why? Because if I ask you, like I said, final good of one may be the intermediate good of another. Now you also drink Ambevela milk, while Rio also purchases this Ambevela milk, but not for consumption, but for production of ice cream, right? So we can't say, okay, these are the consumer goods, these are the capital goods, because still the double counting error is there. So because of this, what we do is like, it is very difficult for you to categorize, okay, this is a final good, this is an intermediary good, because goods are categorized based on usage, not nature. By just looking at a product, you can't say, okay, this is a capital good, this is a intermediary good, this is a final good. You cannot do that. You have to use it. Based on the usage only, you can categorize it as such. Yes. Now, the next method is the value added method. What is this value added method? So guys, value added method. Now I explained the final output method. Now I'm explaining to you the value added method. So, can you all please check? I think one of your mics is like, some of your mics are open on. Yes, just to like, just let me all know in case you all haven't noticed. Okay, unless there are questions. Okay, so now when we talk about the value added to the economy at each stage of production, so guys, value added method, we calculate what is the value that is added at each stage of production. I would say this is like, with my experience, I would say this is the best method to calculate GDP in the output approach, because this is a bit difficult. There is a practical failure in this method. Here guys, if you take, you have now each stage, what is the value creation you take. Example, now let's say there is a cow, okay, Ambevela. They obviously they have a farm, so they take milk, they get milk from this cow. Say the milk that you get from this cow is 1,000 liters and it is 40,000. Now you have 40,000 worth of milk. So from the cow you got milk, you created 40,000 to the economy. Okay, next, from this milk guys, now you are making ice cream. If you're making ice cream from this milk, again there is now ice cream, you will definitely not sell for 40,000, you will sell it for a higher price, that is 70,000. So now there is a value addition of 30,000. Okay, now there is an increment, that is for that now 70. To produce this 70,000 worth of ice cream, they got milk for 40,000. So 70 minus 40. Now there is an addition of 30,000 to the society, to the economy, right? Now keep that aside. Next, we take this ice cream. Now this is making the ice cream. Now you're selling it. So Rio made it. Now say Kiehl's is selling this on behalf of Rio, or Cargill's made it. Now Cargill's Food City is selling this on behalf of Cargill's. Now what happens is Cargill's Magic, I think. Yeah, Cargill's Magic. So ice cream, now they have like they have put it into a container. Now they are selling out and they are distributing it among the stores. Now they are selling this for 100,000. This ice cream they got from Cargill's Magic for 70,000, but Food City has added 30,000 and they're selling it for 100,000. So Food City added a value of 30,000 for this ice cream, and now they're selling. So guys, you can take the value addition of each stage, that is 40,000 plus 30,000 plus 30,000. So you know 30 plus 30 is 60 plus 40 is 100. So guys, the final value, if I ask you what is the final value of the economy, what is the final value of the output, that is the aggregate or the total value of these value additions, which is 100,000. Did you notice this 100,000 is also equal to the final value of the good? Why? Because to produce this final good, we purchase this one. All these values are included in this ice cream container, right? So guys, that is that. The value addition of each stage is also equal to the final value of the goods, because at the end, you want to obtain that. Now, if I ask you, okay, what is the value? You can't calculate each and every, because the double counting error is there. Because of that, what do you take? You take the value addition at each stage to calculate what is the output. Okay, so I hope this is clear. Any questions? Drop in the chat box. I'll look into it. Okay, next one. So guys, there are two main bases to calculate this GDP according to the value added method. So value added method also, guys, we have two main, we categorize this into two main methods called the production source method and the income source method. Production source, like you're calculating what is the value addition to the society, right? So to calculate this, you take, okay, from each production stage, what is added? That is the production source method. Then the next one is income source method. That is the income you get, like what is the additional income each person get? That is the other method. Yeah, sorry, with the income source method is what is the income each person gets, right? Each seller gets. Now the production source method, you calculate it by deducting intermediary consumption from gross value of output. We calculated this before in the example with the ice cream. So output minus the intermediate consumption, you calculated the GVA. So for each good, you calculate it. Example, another example is bread. If you were not clear with the previous example, I'll explain it to those who didn't understand it. So guys, to produce bread, you got wheat. Okay, you got wheat. Wheat, pretty sure y'all know what wheat is. So anyways, you get the output. So wheat is being sold by the farmers, let's say for 100. So this 100, obviously cost is nothing. Let's assume the cost is nothing. Then there is an addition of 100. So 100 minus 0 is 100. Then this wheat, you use it to produce flour. This wheat, you use it to produce flour. I think you know this one. From wheat, you produce flour. So then you use this wheat to produce flour. So you use this wheat as the input. This you buy and you use it as the input. I think it's clear here. You use it as your input. So output minus your input. Again, you're selling this, like obviously you will not sell flour now for the price of wheat. You will add a margin. So 200, let's say you're selling the flour packet for. So 200 minus 100 is there is a value addition of 100 now. So guys, next one, when you're making bread, now you are using this, again, you are using this output. Now, obviously you're using flour to make bread. So you're using, let's assume you're using the entire flour packet. So now this is your input. Okay, assuming guys, no other product is there. Okay, like usually what happens is you don't use the entire flour packet to produce one bread. No, so you have the cost of other materials. So you take each item and you add it here. Okay, for explanation purposes, I'll take this. So guys, now you're taking it for as your input cost, output of the bread. Now let's say you're selling the bread for 400 rupees. 400 minus the cost of the inputs, you have the value addition of 200. Now you know 100 plus 100 plus 200 should definitely be equal to the value of the final good. Let's check, cross check. 100 plus 100 is 200 plus 200 is 400. Yes, final output is also 400. Hope I'm clear. Okay. Next approach is the income source approach. Income source approach is, guys, we take the value addition by calculating, value added is calculated by including all factor incomes that are generated by the factors of production used in the production process. So what are the factor income that is received for the production of goods and services? Now, to produce this, I used my labor. So you take the cost of labor. I used my building. So you take the rent. I used my capital, money. So I get the interest or whatever. Then you get the entrepreneurship. I used my skills. I used my knowledge. So for that, I'm getting a profit. And also remember this. This is a point where most of you get wrong. So if you all are it's better if you can write it down if you haven't printed this out, or if you all are not referring to a soft copy. Remember, income source method, you have to add consumption of fixed capital, because generally consumption of fixed capital, that is depreciation, guys, we include in it is included. Now remember, this is not minus depreciation. Depreciation is included, I'm saying. So for these ones, you have to add. CFC is depreciation, consumption of fixed capital is depreciation. So we have to include it because it is not yet removed. We have to externally remove it. So if you're calculating GVA, CFC is included. I hope it's clear. Remember, since it's depreciation, we usually minus depreciation. This is not minus, this is plus depreciation, meaning that depreciation is included when calculating GVA. Okay, so let's go to calculating calculating the value of output. So guys, the value of output, sorry about that. So anyways, pretty sure this is this lesson is actually very easy. If you to be honest, it was like I didn't like this lesson at first. When I was doing my A-levels, I did not like this, but like just as I learned it. But later on, when I properly understood this, I think this is the most easiest lesson out of everything. Because if you're good at like studying, and you don't even have to study, because this is just basic knowledge, like general knowledge, because it's the same thing that has been repeated in the past papers. If you check, this is a really good question. If you're good at this, like just make sure that you have the basic, then it is the same theory that is applied to all the questions. If you can complete like all the questions, all the past papers, if you look, if you do it before the exam, pretty sure y'all can nail the paper. Y'all can get definitely an A. So questions, I'll just look into the questions first. Gray economic and illegal activities, guys, it is not included, but we would like to include it, as in it's difficult to value. Can you tell me, like if I ask you, okay, what is the value of the illegal activity? Does the government know how much of illegal activities we have done? We don't know. So it is not included because of that purpose, but it should be included. It should be included because it is something, we are producing a good or a service. It is coming under productive activity, but it's practically difficult to measure. Okay. Shares purchasing is not included because it's purely financial. There is no value addition to the, you're not producing a good or a service. In economic agent who contribute to GDP, what about general government? General government, yes, they do contribute to the economy, but we take the list I showed you, those are the main activities. There are some other ones as well. Next one. Can you explain what is double counting error once again? Okay, it'll take some time. I don't want to tell the name, but like whoever sent this to explain double counting error once again, can you drop a message if you still want it? Because I think I explained it twice. In economic agent who contribute to GDP, what about, okay, I answered that. What is GVA? GVA is gross value added. That is, you take now, like I said in the previous example, you take the value additions of each stage, you take the total of these value additions, that is gross value addition. An economic agent who contribute to GDP, what about general government? I answered that, I think now. Then what is the difference between economic territory and production boundary? Economic territory and production boundary. So production boundary is what we are producing, like what are included and what are not included. Economic territory is basically what is the territory, where are we? Like Sri Lanka, if you take, what is the borders of the country? But production boundary is not that. What are we including and what we don't include? Then can you say something about add in the income source method? Hisma, I'm not quite sure about your question. Can you rephrase it? GVA means profit. No. GVA is gross value added. Go back to that. Yeah. So guys, gross value added. What is the value addition to the society? Like I said, here value addition. Total of the value addition is gross value addition. GVA is the total value added to the society. Okay, that's the only difference. Then income source method, someone has asked. So basically, remember these components, the different incomes. For land, you get rent. For capital, you get interest. For labor, you get compensation of employees. For labor is now compensation of employees is the same as wages, guys. Then entrepreneurship, you get profit. Okay, and you add CFC in addition. Okay, so I'll move on to the next one. Now this is where you might get confused. Okay, so listen to this carefully, because this is very important for you to understand the lesson. I'm saying this again, vital, so please pay attention to this specific part. Okay, so now guys, basic price. If I ask you what is the basic price, this is the revenue that is received by the producer for a unit of output. For output, what is the basic price I get? For selling this to the market, what is the basic price I get? So guys, basic price is not anything complicated. I'm saying this again, it's a basic one. So basic one includes, now guys, remember, basic price generally in the output method, you do not have to do any of this. You just calculate what is the output of each stage. I'll explain it in detail as we go on. But remember, just there are two methods to calculate in the output approach. Also, there are two methods called sectoral approach and institutional approach. Here, you just add the value of the sectors, output of the sectors or output of the institutions. Then you get simply what is the gross value added at basic price. Just remember that this basic price will include, usually it should include what is the factor cost and the net taxes on production. The taxes on production should be included in this. It is included. If you calculate it using the output approach, it's usually included in the output. But income approach, you have to separately add it. So just remember, output approach, it is usually included, because when we talk about the value of the agricultural products, now, like I said, there are three main methods to calculate it. So agricultural products, when you talk about what is the value of agricultural products, obviously the taxes that were imposed for the production of these agricultural products were included in it, right? So this net taxes on production is included in the basic price along with the other factor costs, okay? So when we talk about these net taxes, guys, there are two main types called net taxes on products and production. Again, I'm saying this is also, guys, this is tax will not depend on the output, but depends on other factors such as value of the asset, effect on the environment. So remember, this is an indirect tax because it's not directly related to each unit of output. It is a lump sum tax. These production taxes are lump sum taxes. Okay, so just keep that in mind. And for the output approach, when you take the value of each sector, the output of each sector, it is already included in it. Okay, and the factor cost. Okay, so the net taxes on products are there. Net taxes on products is like when you're selling. Once you produce the product and you're ready to sell it to the market, what are the taxes? Now this one, I'm pretty sure you have learned it in the third lesson, government intervention, where you say, okay, when we talk about a product, when the government imposes a tax, I think I can show you this. Yeah. So if you like, I think most of you can remember this. Now, when we talk about this, you have the price and the quantity. We said consumer surplus, you know this one. I'm pretty sure you have been, you know this because last seminar, I think Arshad Aya also explained it. So anyways, this is your total tax revenue. You know this. I'm not going to go in detail about this. Top part is paid by now. If you draw a line here, top part of this is paid by the consumer, tax portion which is to be paid by consumers. Bottom part of it, bottom half of it is the tax portion that is to be paid by the producer. Pretty sure you all know this. Okay, so back to the lesson. So guys, when we talk about these taxes on products, remember that both of these are included in it. Okay, these consumer's part as well as the producer's part. Next one. So guys, now basic price, I told you in the output approach, they will give it to you. They will include the production, whatever it is, like when you talk about the total output, taxes on production is included in it, like I said. Next one, when you want to calculate the producer's price, now guys, producer's price has to be calculated using the basic price. Producer's price, you have to add the tax portion which is paid by producers. In the taxes, when we pay taxes, what is the portion of what is the portion of taxes that should be paid by the producer? The bottom part in the diagram, in the graph I showed you before, that is what you should add, the net taxes paid by producers. You can get the producer's price. It is usually uncommon that they will ask this, but just have an idea. Okay. Then the next one is purchaser's price, or you call it as the consumer's price. So guys, this is the price which is paid by the market price, and this is everything is the same. Okay, purchaser's price, consumer's price, market price. So you take the basic price, then you add the taxes paid by the producer as well as consumers, the entire taxes. That is, these two together, you can call it as the taxes on products. Okay, without dividing into two, you can say this is the total taxes on the products. Then you take the, now obviously basic price plus the producer's portion, you get the producer's price. That I have further explained it in detail, but you don't need to if you understood this. So then you add transport charges, trade margins as well. Now, if they ask you what is the purchaser's price, guys, you add these the transport charges and trade margins. That is the margins that you keep to sell. Okay. So then you get the purchaser's price. Next one is the market price. So guys, remember market price, if you calculate now, the only difference between the market price and the purchaser's price is this, these transport costs and everything is like, generally we don't include in it, but it is included. But if they usually give you GV at basic price, it's simple. You just add or deduct the taxes on products. Like I said, basic price, to this you add what is the taxes on products. You have the basic price I get for the production of this sanitizer bottle. Then what are the taxes that I have to incur to sell this sanitizer bottle to the market? Basic product, I add the taxes that I have to add on the product. Now, when let's say, pretty sure you all know these vehicles. Yeah, let's take a vehicle. Now, no, not a vehicle. Let's say, okay, any product. Sometimes you might have seen these dishes, right, in the when you go to a restaurant. So prices are added. Prices, the market price is calculated by adding the taxes on the products. So basic price plus the taxes on products, plus and minus the net taxes. Net taxes is, guys, taxes minus subsidies. I hope you guys know this already, since we're in the fourth lesson. I think you all know this already. Taxes have to be paid. It is a cost, while subsidy is a relief for us. So for this price, we add the tax because we want to charge it when we sell it to the market. Subsidies, we receive it, so we remove it. We get the benefit and we pass on the cost. And then you get the GDP at the market price. Hope it is clear. So now you know tax, net other taxes on production is included in the GDP at basic price. It is already included. You do not have to include it in the output approach, while net taxes on products should be included to calculate the market price. It is only relevant to the market price. Okay. But guys, remember, this is not completely to be avoided because you need this in other approaches. Okay. So guys, GDP under the value added method. Now, when we talk about the GDP under the value added method, I said this before, there are two main approaches, I told you. There are two main approaches, I told you, called the sectoral approach and the institutional approach. Sectoral approaches, guys, we calculate the GDP by calculating what is the output by each production sector of the economy. Okay. I'm pretty sure you all know that there are three sectors in the economy. It's been taught for O-level commerce as well. There are three main sectors, if you don't know. call the agricultural sector, industrial sector, and the service sector. Agricultural sector means they will like all these agricultural products, while industrial means construction and those ones, while last one is service, that is the services that you provide, such as restaurants, everything. Okay, we will look into it in detail in the next slide, just to give a gist of it. Yeah. So sectoral approach, there are three main sectors. Now, again, these are methods of calculating GDP. How to calculate GDP? You take the GDP of each sector. What is the output of the agricultural sector? What is the output of the industrial sector? What is the output of the service sector? So guys, if you add these three sectors, the value of the output of each of these three sectors, you can get what is the total value of the economy. Now, if I ask you, okay, how can you categorize the value, the output of the economy? You can categorize output in different ways. You can categorize it as, okay, like I said before, okay, tangible goods, intangible goods, goods and services. Then what else? There are many methods, right? So this is one method. Like for the calculation of GDP, we use two methods, sectoral and institutional, because it's easier to calculate. Although there are many, guys, these are the two that we like that they officially used to calculate are these two methods. So sectoral is we take each sector, output by each sector. So I will show you the CBSL report to show you like practically this is being done, because you might think, okay, these things like, is it only theory? But no, it is practically being implemented. Now, guys, if you take this one, this is the Central Bank Report 2020. Now, if you take this one, you can say GDP, gross domestic product, by industrial origin at constant. So basically, this is the sectoral approach. You have the each sector. I told you there are three sectors: agriculture. Now you say it, agriculture, forestry, and fishing. Then industries and services. These are the three main sectors. Under each, you have cereal, rice, vegetables. You take, okay, growing of cereal. What is the total value of cereal? Remember, these are in these are in percentages. Out of the total percentage, cereal has taken 0.2%. Okay, vegetables, sugarcane, and all, fishing, you have calculated. Industries, there are different industries in an economy, such as construction, mining, manufacturing, electricity, gas, like that. You take the total value. And services. So obviously, I'm pretty sure you all know that when you compare the three, services are the biggest contributing sector, because even if you take these restaurants, you might think so pretty sure, like, even I got this wrong at first, along with most of my classmates. You should be knowing this now. Now, when you say restaurants, what comes to our mind? Okay, restaurants are selling a good. You might say restaurants are selling food. No, restaurants are providing services. So most of these products, guys, although we think it is actually a product, actually these agriculture, fishery industries, no, it comes under services. Okay, so services are the most contributing factor. Then industries, last is agriculture. So you take the addition of the output of each sector. I told you, you get only the gross value added at basic price. I told you, you take the pure value. Okay, what is the pure value of output? What is the pure value of the agricultural outputs? In this, you have the production taxes on production, because we're talking about the output here. These are at basic prices. Obviously, when you calculate the three, remember this, when you calculate the three, you will get basic price. Generally, guys, we calculate it using the basic price. Then once we add the taxes on products only, we get the market price. So usually we calculate it at basic price, then we add the taxes less subsidies on products to get the market price. Hope it is clear. This part I'll explain later on. First, you need to know up to GDP at market price. Okay, next one. Next approach is the institutional approach. What do you mean by this institutional approach? Now, similarly, I told you there are many ways to calculate what is the output. You can categorize the output in many ways. To simplify, what is the total output? One method is the sectoral approach, like I said. The next one is the institutional approach. In this, guys, what we do is we categorize the output into different institutions. Okay, like what is the output by each institution? Now there are 5 main institutions. There are 5 basic main institutions. Okay, main institutions, guys. There are many more institutions, but we take only main 5. That is the household sector, government, that is 1, government is 2, business sector, guys. We don't say it's business sector in this lesson. We categorize it further into 3. We be more specific. Business sector, we can classify it into 3, called the non-financial corporations, financial corporations, and not-for-profit organizations serving households. You might have heard about this. You might have seen these abbreviations. You might have seen this abbreviation, I'm pretty sure. This means not-for-profit institutions serving household. Okay, this is another institutional sector. So the first sector is a household, second is the government, non-financial corporations is the third one, financial corporations or corporates is the fourth one, and not-for-profit institutions serving household. So we take what is the output produced by each of these institutions. What is the output of household, government, not-for-profit, financial, and non-financial. Okay, so I'll again show the CBSL report for practical knowledge. Yeah, so when we talk about this one, you can see this is the contribution from institutional sectors. So you can say percentage share of gross value added by each institutional sector. So out of the GVA, most of it is contributed by, now you can see 1, 2, 3, 4, and 5 household and not-for-profit institutions serving for household are taken together here. So most of it is produced by households and not-for-profit institutions serving for household. Second largest is non-financial companies. Next is, guys, this should be green. I think they have got it like by mistake. They haven't included it because there's no gray here. Then, oops, sorry, it is, yeah. So basically now this one, if you take these 3, if you take these 3 columns, agriculture, how many of them are contributing for agriculture? So as you can see, 82% of the agricultural products are given by household, while only 18 is not for profit, non-financial companies. Like that, guys, we can classify this. I hope it's clear. Okay, now towards the last bit. Okay. 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 So then again, when talking about GDP, GDP is the final value of the goods and services that are produced within a geographical boundary inside our little country. How many goods are produced is what you calculate using GDP. Okay, so this includes residents and non-residents. Who are these guys? Residents are those who have been living in Sri Lanka for a long time. Non-residents are not living in Sri Lanka for a long time. Example, foreigners, foreign companies or foreign businessmen. Whatever they produce inside Sri Lanka within a particular period is calculated in GDP. Remember, GDP, any activity that is happening inside Sri Lanka, we take under GDP. Okay, next one. GNP is quite different. Now, I saw one of your questions where they have asked, okay, if the revenue is like, if a multinational company is earning, shouldn't it go to the mother country? Yes, when calculating GNP, not GDP. Okay, GNP, gross national product. This is what is the national product. What is the product that is produced by the nationals of the country? The nationals are Sri Lankans of the country, the residents, basically residents of a country. Okay, now pretty sure you have a cousin, definitely I'm 100% sure you have a cousin or a friend or someone in Australia or Canada. Those two are the basic countries, but you're pretty sure you have cousins in New Zealand, in India, in America, in UK. Sure. So basically whatever they earn in those countries, as Sri Lankans, as residents of Sri Lankans, if you are earning as Sri Lankans, if you're earning as citizens of Sri Lanka, if you are earning in another country, it is considered in the national product, because we are strong together as a nation, they say. Nation is all the Sri Lankans. Okay. So we take the value of all the Sri Lankans to calculate the GNP. Okay. Residents living in and outside of Sri Lanka we take. Okay. So this is a really good way to understand this. Now I would say this is GDP. I told you inside Sri Lanka, if you are producing something, it comes under GDP. So guys, inside Sri Lanka, there are two types of people. There are the Sri Lankans who are living in Sri Lanka, and there are the foreigners who are in Sri Lanka for a temporary vacation or whatever, like temporary purposes, right? They might be doing business or whatever, but they are not citizens. Okay. So they are the residents and these are the non-residents. Okay, this is GDP. Forget about the merger, forget about this whole Venn diagram thing. Just remember this one. Just focus on this one. Okay, Sri Lankans living in Sri Lanka and Sri Lankans who are not living in Sri Lanka. Sorry, the foreigners who are in Sri Lanka. But national, if you take, like I said, now when you talk about the nation, there are the Sri Lankans who are living in Sri Lanka. Like us, we are living in Sri Lanka, we are producing in Sri Lanka. But also, you have your cousins who are Sri Lankans, but who are earning outside Sri Lanka. Sri Lankans who are outside Sri Lanka. Okay. So the common party for both is this Sri Lankans who are living in Sri Lanka. Okay. Now, when we convert this GDP into GNP, it's pretty clear from this diagram. If you want to convert this GDP into GNP, you have to exclude this part. Now, guys, this circle, this entire thing, we are going to convert into this. So, you know, only this portion is included. Only common thing from the GDP is this portion. So when we are converting into this one, into GDP, out of the GDP, we have to remove this part because this does not matter to us. We have to remove this part. What are the income that is earned by the foreigners in Sri Lanka? Okay. And we have to include those, the income that is earned by the Sri Lankans who are not earning inside Sri Lanka. The income earned by Sri Lankans who are not inside Sri Lanka. Okay, these ones you have to add. Example, your parents sometimes might be, your parents or your brothers or sisters might be working in another country temporary. So their income should be included in GNP, but not GDP. Okay, if they're not working for a Sri Lankan firm, of course. So now when converting this GDP into GNP, you have to add this net primary income. What do you mean by net primary income? Primary income receipts minus primary income payments. I'll explain in detail. So GDP, I told you, you have to now, when converting GDP into GNP, you have to add this part. These are, you call it as, so the amount that your parents or your cousins earn by living in another country is called as net primary income receipts, guys. Okay, net primary income receipts. That means they will earn in their country, but they will ultimately send it to Sri Lanka. They are like working for Sri Lanka, right? I think they are Sri Lankans who are working in another country. They are sending their income. So these net primary income receipts, we have to add. We have to add this one. Okay. While the payments that we make to these foreigners who are temporarily employed or who are working not in the long term, they are not residents of the country. These ones, guys, it does not matter to us when calculating GNP because we are talking about the nation's product. Nation's product, we don't like nation's output, all the nationals output, all the people who are Sri Lankans. So foreigners ones we have to remove. So for foreigners, we pay. Okay. Foreigners, we pay them, we pay salaries and stuff, we have to remove it. Receipts, we have to add. Payments, we have to deduct. So GDP plus net primary income receipts minus the net primary income payments. Then you get the gross national product. I hope it's clear. Okay, that was the last bit. I'm extending this net primary income again. Net primary income receipts are the factor income that is received by the residents by providing their factors of production for the production. Now, if you use your residents of Sri Lanka, they are using their factors of production for production. Example is cinnamon. You might, cinnamon, definitely you know cinnamon grand, cinnamon lakeside, all this is a chain of cinnamon. So cinnamon hotels is not only there in Sri Lanka, but also in countries like Maldives. What they do is, now cinnamon hotels, like obviously whatever they earn in those countries, you have to take a portion. The dividend income for these investments, you have to take it. Okay, not the entire income, of course, the dividend portion, that is the portion that comes to Sri Lanka, you have to include it. Then the net primary income payments, you have to take the factor income that is paid for foreigners. What are the amounts that we pay for the foreigners for using the factors of production of a particular country? Okay, so you have the interest on the loans that is received by Sri Lanka. Sometimes Sri Lanka might receive these loans. For this, what is the interest that we pay? Because this interest is not paid to Sri Lankan, we have to pay it outside, so we have to remove it. And the dividends that are paid for foreign companies. Now, like here I said, dividends. Now, Maldives have to deduct it because we are including it. Now, Maldives cinnamon is paying returning these dividends to Sri Lanka. Similarly, if a foreign company is working in Sri Lanka, if a foreign company is operating in Sri Lanka, we have to remove it as we have to pay it to them. It's included in their country. Okay, dividends. That is it. Yes, we have income approach next. We are almost, it's 9, I think. Yes, it is 9. I can do a bit more, but it is not the promised time. So let me know if I can give you just an introduction about the income approach. Just drop a message if you all want an introduction, or that's fine. Any questions, just drop it in the chat box. Can we do some questions? We can do some questions. I have not included in the PowerPoint, unfortunately, because I thought I will run out of time. But if you all can get your past paper books, I can do some questions. Just drop a message. But guys, again, output approach, like there are no questions a lot. Like, I mean, there are MCQs, but not a lot of compulsory questions are there. That is MCQs. But second part, for the second part, they mostly ask, most of the time, they ask from the expenditure approach and the income approach. Then, can you please explain final output method? Okay, wait, let me write down the ones that I need to explain. Again, final output method I have to explain. Then some of you requested to explain the double counting error. Is a total addition is GVA? You mean the final price? Amina, total value of total addition is GVA. Now, total value addition at each stage is the gross value added. But another method to calculate this gross value added is by taking the final output. I said it's not practical, although they will give you the same thing. Remember, I told you output can be calculated using 2 ways, called the gross value added method and the final output method. So, like the final output method, you can calculate it. It will give the same answer, but it's practically not possible to calculate the final output, because when I ask you what is the final output, there are many goods, right? You can't say, okay, this is the final price. This is the final price, because milk is also there. Ice cream is also there, like I said before. So usually we take the gross value addition. Okay. No, gross value addition is not profit. I think I explained it once, like I explained it many times. Gross value addition is the value addition at each stage. Yes, so profit, isn't it? No, profit is one component of it, guys. Now, like I said, so when you're making ice cream out of milk, so from milk to ice cream, the difference in the price is not just profit, right? It includes other things as well, such as whatever, like I think, I really don't know. I haven't made ice cream, but I think you have to include these Milkmaid and some other things. So like, or whatever flavors or any sparkles or whatever it is, these are also included. Profit is one component, but it's not the entire thing. GVA in full is not profit. It's one component. I hope it's clear. Is there a calculation in output approach? Is there a calculation in output approach in basic price? Yes, you might get a question in the first part. Is the total addition GVA? I answered that, ma'am. Only the taxes on production are included in calculating. Yes, only taxes, net taxes minus subsidies are included on production is included in basic price, correct? Yes, correct. So isn't mixed income included in income source method? No, it is included in the income approach, not income source method. That's why, like I said, it's quite confusing. It is the income approach, okay, not the income source method. You just need to know income source method. You don't need to know it in detail. Net taxes on production, okay. So we include only the net taxes on production, not the taxes. So we include only the net taxes on production, not the other taxes on production. No. Net taxes on production, sometimes they might say net other taxes on production, same thing. Rest of the world is also there, guys. Now, yes, Adil, there are many institutions you can take rest of the world. Main 5 I said, but there are many. Okay, there are like plenty of institutions. If a foreigner lives in Sri Lanka for more than 1 year, if a foreigner lives in Sri Lanka for more than 1 year, he is a resident in Sri Lanka. We can't say just because he's been living in Sri Lanka for 1 year, we can't say he's a resident. It depends on the country to country. Like if you take in Australia, you might have heard your friends who have gone to Australia, it's very difficult to get this residency, right? It differs, okay? Yes, yes, please explain it. I think you're talking about the income approach. Shamri, if it's the income approach, can you just drop yes, income approach, so that I have an idea? 6 institutions, I explained it. Okay. Please, income approach, okay. Some are asking for questions, some are asking for income approach, but guys, most of them are asking for income approach. Yes, it's better to do questions, but we will have to like search for questions, which might take some time. So I'll go for the income approach. Just an introduction, guys, because this is not the promised time. Really sorry for keeping y'all. Can you list down the activities not included in GDP? Now, guys, there is a huge list. Okay, I sent this document. You just study these ones which are in the document. It should be fine, because this presentation also I made by referring to a lot of tuts and lot of notes, because like what's given at my school and different other schools. So these were the common bases I came up with. So like there are more, but studying this is enough, because you all can't remember everything that is included and what is not. Thank you, Fatima Ashfa, for that lovely comment. Okay, so I'll just give you a small introduction about the income approach, then I'll let you go. Give a second. Yes, so now guys, income approach. Yeah, so income approach, I have included some slides in case if you all needed it. I haven't included expenditure approach, guys, because like one thing is like I did this presentation only for this seminar, so I haven't included I haven't included expenditure approach, but I have completed it up to the income approach. And there is also some areas such as the BOP balances, which is not included in the presentation, but it will also be important for your exams. Okay, so make sure you go through that, not only this presentation, okay, because this is only a part of it. So, but don't worry, income approach and the output approach is covered. So income approach, if you take, guys, now income approach, we calculate the value of the total production by aggregating the total factor income earned by providing factors of production for the production. Guys, really sorry, there are some bit of spelling mistakes. Really sorry, I was very sleepy when I made this. Anyways, what is the value of the output by producing that is earned by providing the factors of production for the production during a particular period of time. So in this period, what is the income that is earned by each person, each person who's contributing for the production? We wouldn't say, guys, persons. Now, you know, there are many institutions, right? You know, there's household, businesses, government, there are many institutions. So as a whole, all the income that the consumers get, the households produce, plus the businesses produce, you take each one here. So what are the income that is earned as a whole in the economy? So these income, guys, we talk about it, we categorize it into two, called the factor income and the transfer income. Factor income is the income that is earned for contributing the factors of production for production. Income that is received for employing the factors of production. While there is another thing called the transfer income. So pay attention to this transfer income because it is not included. So guys, transfer income is income that is received without production. I told you, whatever it is, even if it's there's output approach, income approach, or even the expenditure approach, there should be a value addition. Okay, if there is a value addition, we include it in the GDP. Ones that are redistributed, we do not include. I said this before also. So here I'm saying this again. Transfer income is, guys, one side payments. Income that is received without providing factors for production, like factors of production for production. Example, if you all are, I'm pretty sure like you all have heard this Mahapola scholarship schemes. Like if you all are planning to go to local universities, definitely you might have heard this. So Mahapola scholarship schemes are given, guys, for two main categories. For those who earn a low income, then there is they don't usually give it, like they don't generally give it. It's really difficult for you to get it. Your income should be below a certain amount, and there are certain conditions, other conditions. If you qualify, then they will give you the scholarship, or else there is another portion. If you score really well, so keep that in mind, guys. If you score really well for your exams, if you not just getting 3 A's, if you get a really good score, like 1 point, like let's say it differs, okay, like say above 2 point something, about 2.3, let's say, if you score, it's a general number, okay, it might be even lower or higher. They might give you a scholarship that is for you to pursue your careers like even better. Okay, government helps you. Okay, you learn, we will pay you. You learn for free, that's fine. You performed so well, so we are giving you a scholarship. Like that, like there are many instances. Okay, so transfer income, guys, we are not producing a good or a service. Now, as a student, I'm not the seminar, but when I'm learning at university, I'm not producing a good or a service, right? I'm just gaining knowledge. Still, I get a payment. I get the payment without providing factors of production for production, right? So other than that, pension, I said it before, your parents, what they earn, if they're retired, the income they earn. Your grandparents, they don't work, they don't produce goods and services, right? Although they help you, it's not like market oriented. They are not producing a value addition to the society. Still, they are getting paid with a pension, right? This is a transfer. It's one side. You transfer. You say you transfer an amount using your bank accounts and stuff. So you transfer. Okay. So yeah. So when we talk about this, when we talk about the first one, factor income, I told you factors, guys, there are main 5 factors of production, you know, that is land, labor, capital, and entrepreneurship. So guys, labor, you take it separately because labor cost is so high, we give a separate portion for it. Labor cost, we separately include it. That is, you know, the payment for labor is wages. We include it separately as compensation of employees. So as compensation of employees, we include it separately. Then we have the net operating surplus. Net operating surplus is, guys, any income other than wages. any income other than wages comes under net operating surplus. Okay, so I'll explain this detail in the next slide, but just to go through this. Now, someone asked this question. I'm sure like she got my answer now. Mixed income comes here. Income source method, we include mixed income. We don't include mixed income, but here this is the income approach. Like I said, income source method, guys, they won't test it. They usually test this. They usually test the output approach, that is the GVA method, and the income, the income approach and the expenditure approach. Don't get it confused with income source. Okay, income source method is the way of calculating output. Okay, that is what is the income you get by selling the output. That's why you take the different business sectors separately. Remember, what do non-financial corporations and financial corporations, and we classify it in detail. But here we calculate the income approach. What do each income holder get? Okay, remember that you don't need income source method in detail. Okay, for your A levels. So mixed income we take. Mixed income is, guys, the income that is earned by unincorporated businesses. I'll explain this again in the next slides, guys. I'm explaining this in detail. And also remember, I told you whenever there is income, you have to include the consumption of fixed capital, because capital depreciation, like if you don't include it, we assume that it is depreciated. So we have to include, okay, it's not depreciated. We have to include it. And other taxes like subsidies on production. Now, guys, it's clear. If I include this, you know, now the word production is there. Taxes like subsidies on production. If we are talking about production, you know, I'm talking about calculating basic price at basic price, right? So, guys, by adding these 5, you get the gross value added at basic price, because we are calculating by adding the taxes with subsidies on production, which is the basic price. Okay, I'm saying that again. So I said that again. So compensation of employees, that is the return that the employees get, the wages in other terms. Compensation of employees. So income received by the laborers. We categorize this into 3, called the financial benefit, that is the salaries they get, the traveling expenses, the allowances they get. Material benefits, that are medical. So guys, you can't pay something, it is medical, the facilities that they give, the traveling facilities they give, the car that is given to you, not the traveling expenses, the allowance that is given for you to spend. That is not that I'm talking about. Then social security benefits such as EPF, pension, and insurance. So the aggregation of these items is the employment income. Next one is we talk about the net operating surplus. Net operating surplus is the aggregation of all the income from all factors of production except for labor. So except for labor, what are the other factors of production? You have now, guys, there are main 4 factors of production. Okay, land, you know this: land, labor, capital, and entrepreneurship. So labor we take separately, we add it. Other 3 together, we call this as net operating surplus. So inside this net operating surplus, you have rent, that is the payment for land, then net interest, that is the payment for capital, and you get corporate profits, that is the return for entrepreneurship. So land is covered by this, while labor is covered by this, land, capital, and entrepreneurship is covered by this. And it is all included in net operating surplus. I'll explain this in detail. Rent, if you take, guys, rent is not just the rent that you get by giving out a land. These are the rent for real properties, but also rent for intellectual properties. Pretty sure y'all have heard intellectual properties. Y'all know these trademarks, goodwill, these trademarks, goodwill. Yeah, like there are many, right? It doesn't like I'm thinking about a lot of things, so it doesn't pop up into my mind right now, but pretty sure y'all know this one. So intellectual properties, the rent that you give, that is the payment that you do for these intellectual properties, such as you might pay royalties and stuff, right? So that is included in rent. Other than that, the net interest, the interest for the funds which contributes to the value addition, something to keep in mind. So guys, interest, we take the loan interest mainly, okay? So loans, guys, there are private loans and there are government loans. Government loans, any loan, okay, doesn't matter if it's private loan or government loans, both are given for 2 main purposes. Either it is given for consumption or it is given for investments. For consumption, that is for your consumption, that is now There is like, you might get a loan to buy your own car, that is for consumption purposes, or you might get a loan to invest in another business. Okay, those are private investments, sorry, the investment loans. So you obtain loans for two reasons: consumption loans and investment loans. So guys, I told you loans in general are taken by two main parties: the private, that is you and I, or you have the government, right? So private loans, you can easily, whenever the bank gives a loan, they can ask, okay, are you obtaining, what purpose are you obtaining it for? Is it an investment or is it for your consumption? So you can easily classify it. But guys, if you talk about the government loans, it's difficult. Government loans, you don't obtain small amount as government loans, right? You obtain huge amounts, sometimes millions and billions, right? You can't say, okay, of this portion, most of the government loans are obtained for consumption as in for the consumption of people, that is for subsidies and these like welfare purposes. Now another example is, now government obtained these vaccinations, like they obtained loans to buy these vaccines. Do you think these loans that they obtain for vaccines is considered as a investment? No, it is consumption. Okay, it is consumption of people. So basically, most of the loans that the government take, it is very difficult for you to classify, okay, this portion is for consumption, this portion is for investment. So we generally take government loans are taken for consumption, we generally say, because it's difficult to distinguish. But private loans, of course, you can distinguish. Okay, so because of that, guys, we do not include. Now consumption loans in general, if you take, you're just consuming it. You're not producing a good or a service to the society, you're just consuming it. If you're consuming it, there's no value addition. I told you, for you to create value to the society, you should create a good or a service, new good or a service to the society. So if you invest, if you get this loan to invest in something, yes, you are getting this income to invest. You are doing a value addition to the society. But if it's consumption purpose, if you're obtaining this loan for consumption purposes, it is not included in the GDP because it is not value adding, simply. Okay. Then the next one is the corporate profits, that is profit before tax. In this profit, I missed a part. So consumption loans are not included, I say. So private, out of the private loans they obtain, the interest on consumption loans are not taken because it's not value added. But for investment purposes, it is included. Then again, government loans, I told you, it's most of the time, majority of the loans are obtained for consumption purposes. So we take government loans as loans obtained for consumption. So you know now, loans that are obtained for consumption is not included in GDP. Since it's difficult to distinguish, guys, we are considering at excluded. We are excluding it. Okay. Now, the next one is the corporate profits. Corporate profits will include income taxes. Obviously, guys, in the profit. Now, you know, like I said, most of you are doing accounts. Pretty sure you all are familiar with it. Profit you earn, you categorize it into two. Some profit you pay out to the shareholders. Some profit you keep it in your business for the growth of the business. These profit, the undistributed part, you call it as retained earnings. Distributed part, you call it as dividends. And you pay taxes. So that is also included in the corporate profits. Mixed income is the net income of these unincorporated businesses. Corporated businesses income is included in the operating surplus here. But this one, you take the unincorporated businesses such as farmers. So when you're talking about the farmers, income minus what is the cost of the farmers, cost of the purchase of inputs, and capital depreciation. Whenever you take income, you have to deduct, like you have to include this capital depreciation, I said. Then consumption of fixed capital, you have to include, like I said, other taxes and subsidies on production. Remember, this is a lump sum charge. I said it before, this is an indirect tax. The example, liaison fees and the pollution taxes. Remember, it is lump sum and it is on production. I told you, if you take the product, you can clearly say, okay, this is the tax on the product. But if it is a revenue, guys, it's extremely difficult for you to say this is the tax. So if it is the revenue, you can't say, okay, tax is included. General tax is not included in the revenue. But in the output, it is generally included. That's why we separately add this. So calculating GDP using the income approach, you take the 5 components, that is 1, 2, 3, 4, and 5. These are the 5 we wrote here. 1, 2, 3, 4, 5. But guys, these three together, we call it as gross operating surplus. So if they ask you to calculate gross operating surplus by giving you the net operating surplus, remember, net operating surplus plus mixed income plus consumption of fixed capital will give you gross operating surplus. That's what they have done here. Gross operating surplus, under this, you have net operating, mixed income, and consumption of fixed capital. So the 4 plus other taxes, net other taxes, less subsidies on production, then you get GV at basic price. Remember, you are talking about production, so you add you get basic price. But to this, if you add or deduct taxes on products, you get the GDP at market price. Same thing. Now, guys, once you calculate GVA, converting into GDP, converting into GNP, everything is very easy. The only thing that changes is the way of calculating GVA at basic price. In the three approaches, the way of calculating this GVA at basic price is different. Other than that, all other things are same. Okay, so if now you arrive at this, then the other ones are very easy. You don't even don't study it. Study it under one approach, but GVA of each approach you need to remember. So that's it. I think the seminar was helpful for y'all, and y'all gained something out of it. If there are any questions, just drop. I'll check. Thank you for the lovely comment, Jyotini. And yes, definitely. What about EPF? EPF, where is it included? Guys, EPF is not included because EPF is a transfer payment. It's a one-side payment, okay? It's not included. It is a transfer income. I hope you guys can remember this part. I told you income divides into two. Transfer income is EPF comes under transfer payments. So it's not included. Oh, sorry. No. Yeah. So guys, this is income is like when you're earning, okay? Like when you are earning, the EPF contribution is included. But generally, if they say EPF, it is considered as a transfer payment. Okay? Generally, if they say EPF, it's not included. My bad. There I have included it as EPF, but with another intention of explaining. But when you get it for the exam, it's not included. Okay? Very good. You all have included some intellectual capital. Very interactive session today, guys. Copyrights, patent rights. Very good. Thank you, Nixon. I hope it was useful. You have said it's easier to understand now. Very good. Thank you, Kivishana. Thank you, Swad. Like I'm sorry, like there are really nice comments for me. Thank you so much, guys. Thank you so much, guys. It's actually like it encourages me too. Yeah, thank you, everyone. Like so many comments. Foreign remittances included in GDP? No, guys. Foreign remittances comes under net secondary income, which is coming under net national income. Sorry, disposable national income. This is now this area is it is in the TUT. If you, I think it's in the TUT. No, I haven't included. Sorry. Not that tech savvy, so apologize for that. Yeah. So I haven't included in the presentation, but please do let me know because I would like to help you out. If there are any messages, just drop me. Like foreign remittances, for your question, it's not included because we calculate it in the disposable national income, not in this. Okay. So yeah, disposable national income, not gross, not net, disposable national income. Thank you, Shamza, Asma. Okay, I'll drop my number here so that like if y'all have any questions, y'all can just talk to me. And if y'all have any other questions, because I was not able to explain all the things, all the questions. Thank you, Minuri. Sumaya, thank you. No need to study for us. Very good. Okay, I'll include my number here now. And my name is Anuji. Okay. So hope you gained something inside, like something useful from it. We'll do another session. So guys, I would love to do another session, but the issue is there are a series of questions, the series of sessions that are conducted by many people. So hold on, I think someone will cover it up. Yes. Thank you, Hajra. Yes, and good luck for everyone. Good luck, everyone. I hope you gain something out of it. Good luck for your I-levels. Good luck for your term test. You will nail it. And is Nitmi there? Nitmi? Yes. So guys, we can end the session now, I think. Yeah. Thank you for joining. Good night, guys. Have a safe day. Have a great day. Okay. She's there. Nitmi. Or is it Zara?
So that concludes today's session. Thank you so much, Manjamdi, for joining, spending your time in the session.